Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I'm doing our housing weekly market update. So much going on, so much I could talk about. So, without trying to make this any longer than we need to, let's jump right in and get into the details. So, right now, um, we have a 10-year treasury that ended up at 4.12. And that put today's mortgage rates at 6.3, which is the lowest since the Fed meeting. And we had a 3-year low right before that Fed meeting. But of course, Jerome Powell can't help himself. And he said there's still some uncertainty. So we're expecting them to get a little bit more dovish as time goes on towards the end of the year once their tariff hysteria gets out of the way and they can't have that to fall behind anymore. We didn't get the jobs numbers out this week from the Bureau of Labor Statistics. So we're hoping, by next week, this government shutdown is over. And what does that mean? The government shutdown, in a nutshell, this government shutdown, you know, if it's a prolonged one, it can have an effect on mortgage rates, which means we could see mortgage rates be lower just because of the government shutdown if it's prolonged. How long's prolonged? Well, if it goes on another week or two, we could see an effect with the bond market. But certain, a lot of things that go on in the government could affect us, like getting information from the IRS. If you need to do that for a home loan pre-approval, we're seeing reverse mortgages may be delayed. There's just all kinds of things that could be, held up there. We're also seeing, there could be some delays with FHA and FHFA type of loans. There may, also be a delay with flood insurance and things of that nature for certain areas of the valley or where you live if you're, buying a home or whatever. So there's a lot of variables there without taking the time up just to get into all those. But yeah, we'll kind of see how this all shakes out. Hopefully, it doesn't last too long. But right now, the average is 6.34. The spreads have gotten better, like we've been talking about over the last year. Can we get into the fives? That's what everybody keeps asking. Can we get into the fives? Well, if you go through a mortgage broker right now, um, you can definitely get that. If you go to a home builder right now, about 66% of the home builders, especially the big ones, are offering closing costs. They're offering rate buy downs. Just fixed or first, second, third year type of buy down, so you can get rates all the way down to 1.99. I've seen with certain builders offering appliance packages, window coverings, all kinds of different stuff. So if you're interested in taking a look at that, we could certainly help you through that process and know which builders are going to be more effective to work with. We can certainly help you with that. Or if you're looking at resale homes, um, we could certainly help you get a lower rate there by negotiating a rate buy down that the seller would pay for, much like the builders are doing, but just on that one property. So there's a lot of ways to get a lower rate right now, which are actually going to be a lower payment than getting a lower price. Unless you're paying all cash, then that's more important to you, obviously. Uh, but the spread between the 10-year treasury is what we always look at because between that and the 30-year fix, that's the mortgage spread we always talk about. Usually that's going to be between 1.75 to 2 points difference. It's gotten much better. If it was where it had been a couple of years back, we would see closer to 7% interest rates right now. So this is definitely good news, and the spreads should continue to get better with the high growth that we're seeing. The last quarter, we had 3.8% GDP. So we're heading in the right direction. We're heading in the right direction. And speaking of heading in the right direction, let me see if I've got it here. We had another announcement this week. You may have seen there's a way to kind of sort of head in the right direction of not going with the traditional models of the three credit bureaus and kind of bypassing that. Says many of you may have noticed a recent announcement. This is right from our mortgage broker, Evan Einhorn at Modern Home Lending. And he got this obviously from the Advantage Credit reporting services. But you made a recent announcement from FICO about their new FICO Mortgage Direct License program, which offers tri-merge resellers the option to calculate and distribute FICO scores directly with the goal of bypassing the traditional credit bureaus in an effort to reduce FICO costs. So this is heading in the right direction because if the cost goes down, that cost gets passed on to the consumer, theoretically. We are excited to work with our partners at FICO to be able to bring these innovative changes to you next year when they go live, okay, 2026. To be clear, as of today, open questions remain on how FICO will roll out the program and what day-to-day implementation will look like for our clients and strategic industry partners. We are in close contact with FICO and monitoring developments with interest. We will share updates and intelligence with you as more details emerge. Okay, so very exciting news, heading in the right direction there. That's a good thing. Okay, because now it sets up a competition, and competition means better for the consumer. Okay, that's what we want. We want to see more competition. All right. I thought this was a good article to kind of share with you. The share of mortgages with rates above 6% climbed to a 10-year high as Americans adapt to the new normal. So you've got 80% right here, 80.3% of mortgages in the U.S. homeowners have a rate below 6%, down from a record 9.27% in the second quarter of 2022. Excuse me. Just over half, 52.5% of mortgaged homeowners have a rate below 4%, down from 65.1% in 2022. Increased housing supply shows that the mortgage rate lock in effect is easing, but many buyers are still waiting for rates to drop to 6% or below to make a move. But bottom line, if things come up in people's lives, whether it's work, family, whatever the circumstance may be, and people have to move. And eventually, this could be the new normal, but I don't think it's going to be the new normal long term. There's differing opinions on all that. I think we're going to see over the next year or so a big restructuring at the Fed, and a big difference at the Bureau of Labor Statistics. And I think we're going to see some changes made in how things are structured. I think we may even see a new target point for inflation of 3%. I think we're going to see, CapEx, which is going to be, year 2, 3 years out or more, as we go along, and that builds up a momentum. If it wasn't for AI, not that I'm a big fan of AI, but it is what it is. Commercial construction, that sort of thing would be hurting right now. So we see, we saw the ADP report come out. I didn't pull it for you. Basically, bottom line is because it's not a report that people take as seriously as the numbers that come from Bureau of Labor Statistics. But basically, it wasn't that great. So it's kind of the trend that we're seeing. It's not a broken, but weakening labor market. We talked about the two big revisions over the last couple of reports that we had. So that will bring down interest rates, of course, because the dual mandate of the Fed is full employment, lower inflation. Well, they kind of have to split the baby here. And they've got to figure out how they're going to do that. Not that I'm a big fan of the Fed, but there's a lot of differing opinions there, and I think we're going to see a big restructuring. We're already seeing a big restructuring of the economy with the tariffs and with trade, which I think is going to be a good thing over the next couple of years as we go along, and we're already seeing the effects of that in a good way if you really analyze it. I think the thing that's really, really hurt the job market and production and things at that point has been that crazy inflation. You had basically about 25% inflation over the last 4 years, right? Total. And that really slowed the economy down in a lot of ways. And then at the same time, as they were printing all this money, you also had interest rates go up. They went up a little later than they should, a little bit more than they should. Um, but they went up at the same time, and it just slowed everything down. That's what it was, to tame inflation, to tame production. That's what the goal was of the Fed. I mean, that's what Jerome Powell said himself. So, and that was the function and the levers that they pulled. But anyways, that's where we are. I think once we have some of these other things in place, we're going to see. We got the tax cuts, we've got the lower gas prices and oil prices, energy prices. We'll see that continue to go down, and that should, have an effect on everything else. The big beautiful bill, that hasn't even gone to a full effect yet. So over the next year, we'll see more on that. Home price growth drops to the lowest level in 2 years. Now, Case-Shiller's great, but they're usually lagging by a couple of months. But suffice to say, the home price growth has dropped to the lowest level in 2 years. So we had a slowdown effect there because of the higher rates and higher prices, but mainly because of the rates. I mean, if you're able to get 100 basis points or a 1% difference on a home purchase, you're looking at saving about $300 on the average home. You're looking at saving about $300 a month. So that's a huge difference. And we can negotiate that all day long or more on a home purchase. So if you have questions about that, please feel free to reach out. The the other thing I wanted to show you really quick is here. Zillow forecast for Metro home price change between August 2025 and August 2026. They've got Phoenix at being flat, 0.0. I thought it was pretty interesting because just a few days ago they had a little bit more statistics in here, but they kind of revised everything on this chart. But it shows that Zillow revised its home price forecast for over 400 housing markets, Phoenix being one of them. It's got the entire country at 1.7. Sorry, I'm flipping around here. It had it at 1.7. Now it's got a rise across the country of 1.2% between August of 2025 and August of 2026. We'll see how that shakes out. That's for the whole country, though. And then, Phoenix actually ranks in the top 5 for the most days on market. We talked about it last time. We had 43 days to go under contract, according to Cromford. They're coming up with Phoenix as 74 days on market. I'll show you in a minute right here. Actually, let's just jump to it now. Phoenix is 77 days closed on market as of Monday. We've got a 4.6 month supply of homes. So that means if nothing else went on the market, that's how long it would take to absorb everything. The absorption rate is at 21.58%. Average list price in the greater Phoenix area is $719,000, and the average sales price is $582,000. The list to sales price ratio is 97.68%. Normally, that's a little over 98%. So that's, how much basically sellers are giving up in concessions or price reductions. The active inventory went up just a slight bit there, not quite 1%. Pendings are down the same at 0.8%. And, looking at the distressed really quick, we saw that it's up 4.3%, lender-owned REOs, 2.6%, HUD, 2.9%. It's actually pretty normal, nothing crazy there. Closed units are actually up 4.7%. So, one thing I wanted to kind of bring to your attention is there's a lot of talk around about listing success rates right now. This month, Cromford has it at 69.7%. In other words, listing success, meaning that it actually sold when you listed your property. The historic average, though, in the greater Phoenix area is 69.2%. This month was 69.7%. So again, nothing really out of whack there, just kind of more of a normal market, guys. So for, all the hysteria, I think some people maybe, and so those homes that didn't succeed, they either expired through the contract with the broker that they were with, or they canceled, okay, for whatever reason. So, uh, again, nothing super out of whack there, though. Okay, with that, Metro Phoenix ranks number 17 in affordable housing in a study. That was kind of interesting. So, it's definitely gotten less affordable everywhere for the most part, but most of the places where we're seeing you know uh, more or less inventory is in the Northeast, and in the South, the Sun Belt, out to the West, we're seeing a little bit slower growth in pricing. Okay, so it's kind of catching up, with people's pay and stuff. So that's that's actually good news for home buyers. I mean, home sellers don't want to hear that as much, but that's just it is what it is. Purchase application data. I always like looking at this. You guys know that if you watch this at all, and it's been 22 straight weeks. We've seen double digit year over year growth in purchase application data. Um, we've the last 9 weeks, we've had seven positive prints, two negative prints on mortgage, people who are applying for mortgages. This gives us a window into the next 30 to 90 days looking forward. So it's positive. Now, with the lower rates that we've had, um, we were saying that target point, really our target is 6, but once we get below 6.4, which we are today and have been over the last few weeks, even though it's kind of fluctuated a little bit, um, that 6.4 mark, though, is when we start to see growth over the last few years. So, we like Logan Monashami over at Housing Wire says, we really need to see 12 to 14 weeks, though. So we need to get into like around Halloween to really see where we're at on this. So we'll keep you posted on how things are going there. But that kind of gives us a little window into the next 30 to 90 days. One little known fact too, I picked up from uh, Housing Wire over with Logan Monashami. So it's actually historically for the last 14 years, fall and winter have been the best buyer activity, believe it or not, the best buyer activity over the last 14 years. Okay. For sales prints. Now, it kind of makes sense if people, as people get smarter and learn more, especially with the age of the internet. But, when we see, that people can get better deals in the fall and winter, right? Also, there maybe a seasonal effect. For us, we've got a lot of winter visitors and stuff. So I thought that was pretty interesting. But uh, you know, that comes straight from Housing Wire data, which is super accurate. I mean, they have a tracker that comes out every week and tracks all this stuff and goes and looks at all the historic data. Crazy stuff. But a lot of it, again, comes around the idea that I think people are figuring out they can get some better deals in the winter and fall, or I'm sorry, in fall and winter, and they also some of that could be seasonal. So Cromford Market Index, this tells us if we're in a buyer, seller, or balanced market. Below 90 is a buyer's market, above 110 is a seller's market, and 100 being completely balanced, and that 90 to 110 range is a balanced range. So we're at 80.7. Um, then week over week, we're up 3.1%, which is slowing as far as heading towards the seller's market. So what does that mean? That means that, that's about half of what it was last week. And the week before it was like over 8%. The week before that, it was over like 9%. So right now we're in a buyer's market. And we see that our demand has actually gone up a hair, along with our supply. So, take that for what you will on the index. I'm sorry, the demand just went down a hair. I'm sorry. We saw that in the other chart. and the supply actually dipped just a hair. Nothing crazy, just that 0.8% we talked about earlier. Um, the really quick on the cities, we've got Fountain Hills, Paradise Valley, Scottsdale, Chandler, Cave Creek, Avondale, Gilbert, and those seven are all in sellers markets, barely. Mesa, Mesa, Phoenix proper, Glendale, and Peoria are in a balanced market. And Tempe, Goodyear, Surprise, Queen Creek, Buckeye, and Maricopa City are in buyers markets. So right now, our contract ratio, if we look at the contract ratio, we are so active, what's active for sale, what's under contract, puts us at 31.2. That puts us in a warm market according to this. This is more of the right now kind of stat. This gives us an idea of the heat marks on the map. So right now in Gilbert, 85233, you're in a hot market at 66 on the index. And that's really the only hot market we have. Everything else is balanced to cold. So that's a quick look at that. Now, I wanted to show you guys really quick a couple of things. We have a new product that we've teamed up with. West USA Realty is our broker, and they've teamed up with Zillow. Anybody thinking about selling their house? We have what's called Zillow Showcase, and it basically, once it syndicates out to Zillow, we would, talk about this with you. But putting it in a Zillow Showcase listing receives 79% more page views because it's highlighted in more places in a bigger way. There's also some, it's obviously only certain photographers can be involved in this. There's also a 3D tour that goes along with this. And we would, of course, add video in there. But showcase listings sell for 2% more. And we're seeing that these homes actually sell faster once we put them in there, because obviously so many people are going to Zillow to check out what's going on. So that's a great deal. One other question I had was, is right now a good time to buy? Actually, it is, because you can get really good deals, especially this time of year, seasonally, and with the way the market is, you're kind of in a balance. You're in a buyer's market right now. So, what I would tell people is, obviously rents are going to be different across the valley. It's hyper local, like anything to do with real estate. But when you're buying a home, you escape the cycle of, rising rents, which we've shown before, and you're investing in yourself, not your landlord. So, I mean, it's got to be right for you, the right timing for you. We could certainly run through that with you, go through all the numbers. But getting back to Zillow Showcase, you get 79% more page views according to their analytics, 76% more saves. Those are obviously good because people are going to be more interested. They're going to see your property more on Zillow. And then 91% more shares, because they're sharing it maybe with somebody else, or maybe their kid or somebody out of state that's thinking about moving here. So very interesting stuff. That's something that we're highlighting for all of our clients right now. It's a great way for us to showcase your property, so to speak. And here's a quick video. Hopefully let me close some of these out because I want to make sure it actually shows for you. Okay, let's try this.
What if I told you there's a Zillow product that can help sell you your home faster and for more money? Introducing Showcase Listings. On average, a showcase listing can sell for 2% more. That's $9,000 more on a home sold at the average U.S. home sales price. A showcase listing is also more likely to go pending in the first 14 days compared to similar nearby non-showcase listings on Zillow. With limited availability in your market, Showcase helps your home stand out from the competition and wow prospective buyers with high-res scroll hero imagery, a virtual tour, and an interactive floor plan on a map, giving buyers a clearer orientation of the home and nearby streets. This unique AI-powered listing display includes dedicated Showcase email alerts to buyers looking for homes like yours. Your Showcase listing also helps elevate your home's visibility with prioritized placement in buyers' personalized search results on Zillow. That means over 65% more page views, saves, and shares for your listing. Want your home to stand out from the rest on the U.S. real estate website, visited by more than 231 million average monthly unique users? Ask your agent about an exclusive Showcase listing by Zillow.
All right. So there you go. If you want to sell your home faster and get more money for it, we can certainly help you with that. Um, all right, guys. I think that's all I had for you this time. If you guys have any questions at all, feel free to reach out to us. We'd love to be able to help you out with your home purchase or home sale. We'll talk to you next time.